Yes, 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 yes. Hey guys, Gerald Peters. We're back to the Millionaire Blueprint Part 2. Now this is the code. This is the map. It's directions. And inside of this idea, and I call it this the money flow, and inside of this idea there's a lot of moving parts and there's a lot of components. And this is something you do over your lifetime. You don't become a millionaire on fucking accident. It's purely a destination. So just like if you were gonna drive to Nebraska, specific town at a certain address, it's gotta be that different. You gotta be that specific. And so inside of this idea of building wealth and operating with inside the money flow and what are even the money code, it's gonna look a lot like this. This is the blueprint. It's the same for everyone. Now, my purpose here, and if you don't have a copy of my free book, you don't have to die broke, just DM me, carrier pigeons, smoke signals, come to my house, whatever, and get a copy. Text me, shit, my number's on the page below. Text me and I'll send you a free digital copy. If you want a physical copy, I'm gonna charge you a few bucks. But this is the blueprint. This is what I don't want you to do. I don't want you to pay some guru $5,000 and go into their mastermind course. For the love of God, don't do that. Take that $5,000, take the stock investing strategy that I show you in the book, and start building some real wealth, and fuck those guys. You don't need that. That's what I'm trying to tell you, okay? You don't need a course, you need a course. I'm cool with books and courses. What you don't need to do is to pay thousands of dollars to go to some bullshit meeting, to sit in a room with a bunch of people and not do any fucking work. What you need to do is work, and what you need to do is study and begin to apply the things you know. You all know how to do a push-up. You don't need a course or training on doing a push-up, right? You know how to do it. So learning about the muscles and the bones and the skeletal structure and how to, you don't need all that. You just do the push-up, right? So inside of this idea, where we left off, here's the diagram. It's gonna look the same for everyone. I should have wrote brokerage. Brokerage. So it's all gonna look the same. But it starts right here with your job. Now, if you're working a shitty job and you're not making much money, you should not be investing. Don't invest. First, we gotta fix the well. Now, the well, we use the term a well in my book in chapter 1 of the money flow. I use a well because a well, you pull out water, and I use a well in 3 buckets. I didn't invent this, I got it from somewhere. And the first bucket has the word in on it for necessities, the cost of living of life, insurance, mortgage payments, cars, and all that shit. But inside of that bucket is debt. And so that has a hole in it. So no matter how much money you put in that bucket, money runs out. And then we go to the second bucket, which is the one I want to talk to you about today, and that's savings, and it's not what you're thinking. And then over here we have investing. A lot of people try to go straight to investing, and they get it wrong, and therefore they never actually build up any real wealth because they didn't establish the foundation. And the first time the stock market drops or crashes, they shit themselves and sell their stocks because they don't have the financial wherewithal. They haven't built the mindset. They're not doing the millionaire blueprint, right? They're sort of doing it. They're kind of all over the place. They don't have this down on lock. I'm trying to teach you to be self-sufficient so that you can stop giving your money to Wall Street, stop giving your money to banks, stop following all these ridiculous gurus and giving them a bunch of money. You don't need to do all that. You'll be self-sufficient. You'll know what to do. You'll know how to pick stocks. You'll know what's a good deal or not. You'll know how to buy real estate. You'll know how to manage your money, okay? So first we gotta have a job or a business. Now, the truth is, people get rich in America from business or investing in business or real estate. That's it. Work for a company, own a company, invest in a company, or own real estate. There is no other way. So if you have a job, that's fine. And if you're working 40 to 50 hours a week, that's good, but that's not enough. You're not gonna become a millionaire just working a job. It's not gonna happen. So we gotta devote at least 10, I'd prefer 20 or 30 hours where all the money you make during that time goes into this. Not over here, doesn't go into the bills and necessities. It first goes to savings, and then it goes to the brokerage account in your investing or into real estate. So first, we got to get the job on lock. You got to be the best person at your job. You got to come in early. You got to stay late. If you don't, this is right out of the science of getting rich. If you are not the best at your job, if you're not too big for the room, the universe won't give you another room. So if you're sitting at your job and you hate your job and you dislike your job, your universe will give you an even shittier job. I promise you. And if you haven't read The Science of Getting Rich, go to my Instagram page. I think I have it on here too. Click the link. You can get access on my page. Click the link tree to a free copy of The Science of Getting Rich. You can get access to a free copy of my book. You can get access to my stock trading book and the 10 Pillars of Success. So once we get the job on lock, we're making money, we're pushing that money to this bucket, we come up with a plan to eliminate the debts. I think you should get rid of debts because money going out is the same, money not going out is the same as money coming in. So if I don't make this $200 payment, it's the same as if I made a payment and then I got $200. They're both zero. So instead of having debt, let's just not have debt, and then what we have is money, okay? So money not going out is the same as money coming in to me. So we want to eliminate debt. And before we start investing, because people look at invest, well, I'm broke, so I need to invest. Investing is not going to help you get unbroke. Investing is forever. It's for down the road, like building wealth. Investing, right now I make $150,000 a year passive income from my investment portfolio. I don't use any of it. I don't use it. I reinvest it. So if I'm broke this month, that ain't going to help me. I'm not using it. I'm using that to build wealth. So I have 15 houses, single family houses paying me about $12,000, $13,000 a month in rent. And then I have an assortment of 42 different stocks, bonds, REITs, ETFs, business development companies, and closed-end funds for a cumulative total of I'm collecting about $150,000 a year in passive residual income, all coming into me. And then I still work. And I got 2 side hustles. So I got a full-time business, a part-time business, and 2 side hustles. I work approximately 80 to 100 hours a week, but I love what I do. I consider this work. I'm right here, I'm teaching. One of you are gonna watch this and order a book, and I'm gonna make 10 bucks, 20 bucks, whatever, right? So you should work. You gotta get something going outside your job, or somehow get your job paying you more. I don't know how that looks for you. And if you have a wife at home, she should be earning money. And if you have kids at home, they've been freeloading long enough, they need to be doing. Everyone at your house needs to be worried about you getting money, okay? And then that's going to eliminate the debt. So I'm not going to talk about debt. Go visit Dave Ramsey, and when you get out of debt, stop listening to Dave Ramsey, okay? And then let's talk. I wanted to talk today about savings. So, but before we get there, as you get the bills under control and you get your debts eliminated, that's going to give you margin. So cost of living, how much money you actually make. The difference is your margin. Now with the margin, you can begin to push it left and right. I would prefer that you first push it into a side business. Your first goal, your first investment, you hear gurus say all the time, you should invest in yourself. I completely agree. But when I say that, I don't mean give your money to a fucking guru. That's what they mean. I mean take it and create a side business. I'd rather you take $1,000 and buy a lawnmower than put it into a stock so the lawnmower can begin immediately making you money that you can use immediately, right? So the first thing is to eliminate debt, get your living under control so that you have money. Because the moment you have money, then you don't have to cower like a little bitch every time the stock market goes down. You don't have to be scared, right? So this is what's going to keep you from being scared. You got to build savings. And I'm not talking about a couple $1,000s in the bank. I'm talking about $100 bills, stacks of them, piles of $100 bills that are yours, that you have secured and saved. Now, if you are not capable of protecting money, something is wrong with you. You need to fix that situation. You need $100 bills. I had a good friend who come under a lawsuit. First thing they did was seize his bank accounts. His money didn't help him. His emergency fund was seized. So you need cash, a pile of money inside of the savings account that's yours. Nobody else's. Nobody can seize it. Lawsuits to the government, the bank. Nobody can get to this money. Your ex-wife, your current wife, your girlfriend, your boyfriend. Nobody, your crackhead uncle. Nobody can get to this money. It's cash. And it's yours. And you can pull it out and play with it and count it. And you should. I would advise you to do that. In addition to that, inside of this idea of savings, we don't just want a little baby fund. Ultimately, we're going to try to get to 2 years of income. Now that's going to take time. First, you just got to get some savings, and then we can go to investing. So first we get the income up, we increase the hours, we create the side hustle, that's hopefully where the increased hours come. We eliminate debt, we get our spending under control, but then to push into savings. And I want a big ass savings account. So when you have a big savings account, you don't get all freaked out when stocks start dropping. Now, if all you have is your job, your checking, and your investments, when your investments fall, you get scared. So I'm trying to teach you how to protect the kingdom. If you're a king or a queen, your first responsibility is to protecting the kingdom. It's not to cower like a bitch when soon as something bad goes wrong, which is what most people do. Most people sell when stocks drop and they buy when they're too high. They're manipulated by corporations. I tell you, there's 4 reasons you're going to lose your money: taxes, debt, inflation, and mass marketing. Stop reading all these bullshit stories. And so later on, I'm going to teach you to buy stocks, and I'm going to teach you to buy them when they're cheap. And when they're cheap, they look bad. So you have to stop letting corporations into your mind. And for the love of God, stop giving money to people with jets and giant buildings who live in fucking mansions and you're poor. Stop giving these people your money and start investing the money into you, where you control the investments. You own a brokerage account, right? So this all begins to look like a muddled mess. But the idea of the savings is to protect the kingdom. Now, what could savings look like? Well, it just said cash. What else does savings look like? My savings right now is about $1 million. You may say, what? Savings, the second bucket. First is going to be cash. Lots of cash. And if you're scared of cash, it's because you're, I don't know, man. You got a money problem. I like cash. And people, oh, cash is king. Cash is not. These are broke people talking. Cash is not trash. Cash protects the investments. Cash becomes your best friend in the stock market crash. What else could be considered savings? Debt-free real estate. Debt-free. So I have 10 houses, 10 of them, completely paid for, with over $1 million in equity. Does that protect my stocks? Does having $1 million in equity protect, having 10 houses completely paid for, where I'm collecting about $10,000 a month in rent, does that help me in a stock market crash? You better damn believe it. Because if the stock crashes, what could I do? I could funnel all that money into buy stocks, couldn't I? Now what could I do when the stock prices get ridiculously high, and they do from time to time? I could sell some of those and buy a house. And so you can see how these two asset classes begin to benefit each other. But there's morons who will teach you that stocks are bad. And some of them are our most famous gurus, and it's retarded, idiotic information. It's terrible. It's terrible. So stocks are a viable asset class, and anyone telling you they're not is an idiot. I don't care who they are. I don't care how big their book is or how famous they are. They're an idiot. And anyone telling you to go, now you can choose to go real estate only. I'm not arguing that real estate isn't better. I think real estate's better. But I also like stocks, and I don't think everyone can do real estate. So if you live in San Diego right now, or you live in New York City right now, instead of sitting on your ass crying about the prices being too high, you should be investing in the stocks. And when the stocks rise, you could sell them and buy a house or move, right? So there's no reason to not be investing because of prices. So inside of savings, we got what we call the do-over account. The do-over account is you could reinvent yourself. If you lose your job, if you get fired, if you get outsourced, if you get injured, you have enough money that you could do over without touching your investments. So this has to become a huge part of your investing. So like my son is 50% cash, 50% stocks. Now if the stocks crash, we're going to get rid of this 50%, we're going to buy stocks, and then we're going to go back to filling this up. When stocks crash, I'm going to liquidate my savings and I'm going to put them into stocks, and I'm going to go back to fixing this. When stocks rise, I could do options too. I could sell some, put some in savings. And so these buckets begin to work for you to help you, but the savings bucket, huge sums of money, protect this and allow this to grow. And you'll never have to do a 401k loan. You'll never have to do that. And whenever stocks crash, you'll be happy like me. So what could I do with $1 million in equity if the housing market crashes? Now, people say, well, the lenders won't lend. You're telling me if I got $1 million in paid for real estate, I got 10 homes completely paid for, they won't loan me 50 cents on the dollar? So in the next housing crisis, I'm going to walk into the bank and I'm going to say, hey, excuse me, can I get a check for $500,000? And, you know, if you'd like, I'll give you my stocks as collateral. So I'll use my stocks as collateral. Now this will still be cash flowing, and then I'm going to take this, and how many houses could I buy in a stock market crash with $500,000 cash? Well, if I put $50,000 down, I could buy 10 more houses, right? So I could buy 10 more houses. I could also buy a lot of stocks. So if the stock market truly crashed and fell 40, 50, 60%, I could walk in my bank and say, hey, I need 500 grand, and I can start buying a bunch of dividend stocks. And then when those stocks come back up, I could sell them off, right? Clear them up with the bank. This is options. This is what savings does for you. This is what debt-free real estate. So when you have people tell you, oh, you should never have debt-free real estate, you're talking to bad advice, because they don't understand savings, especially if they're under 30 years old and they've only ever seen an uprising market. Right now, real estate's simple. Anybody can do it. Let's see what happens to their 4% single-family homes, all these single-family homes where they're getting 4 and 5% equity. Let's see what happens when the market turns and they have to lower rents. What's going to happen then? You're going to get 1%? I mean, who's going to sit on an apartment with all the costs and maintenance and all that on 1%? What? I mean, doesn't make any sense, right? And so savings is a huge part of what we're trying to do. So first, get your job right. That's the well. Get your living costs right. Get the debt gone. Create the side income. Build the savings. And then we start investing. And that's the basic formula to the blueprint. Now we're going to continue to go granular and granular. Today I was pushing savings. Inside of the savings is the do-over account. It's the 3 to 6 months like normal, but it also includes things like debt-free real estate and things that you can use at a later time to level up. So instead of being a little bitch and selling your stocks every time something goes down, you could just have debt-free real estate that you could tap, so it's making you money while you're waiting. Instead of sitting in cash like a dummy and watching the stock market go up, you're in the market, but you have savings for the day this comes. The day the crash comes, you're going to have money that you can go and tap and put to work. That's a much better way. Now, this is the Millionaire Blueprint. This is the code. We're going to work our way through it a little bit at a time. A little bit at a time. Feel free